whether the following internally generated items are eligible or ineligible for capitalization as intangible assets in accordance with IAS 38. A customer list built up over the last 10 years of trading updated for the customer's current preferences. Customer list is internally generated intangible asset. You did not, how to say, spend money specifically on this task. You had some salespeople, they were collecting the data, and from their computers, from their Excel files, their data, their sheets, you made a customer list. You never worked specifically on that. It is not to be qualified as, you cannot recognize as intangible asset. Reason being that you don't have a valuation basis for that. You did not pay money for that. You did not purchase it. If you say, I want to consider it as my asset, my question is, how much should be the value? Do you have an estimate of value? And you will say, I don't have an estimate of value. We just made it over the years. We never paid money for that. Okay, I want to write, tell me the value. And you say, I don't have value. If you don't have value, no asset. Because asset must bring future economic benefit, and asset must have some measurement. Value should be there. So generally speaking, customer lists, which are internally generated, they don't have value. They are not, they do not qualify to be recognized as intangible assets. Yes, sometimes they will tell you in exam question that a customer list which has been valued by a third party, like you make an assessment of that, you get it valuation from outside. If you make it valuation from outside, from a third party, then you can recognize it. But in this case, they do not tell us that it has been recognized. So we call it that it's not there. So identify whether the following internally generated items are eligible or ineligible for capitalization as intangible assets in accordance with IAS 38. We don't. Specialized tooling for a new product developed by the business. So it is specialized tooling for a new product. It is an asset, eligible. A working version of a new machine that uses new technology used for testing of the prototype apparatus. It is a working version of a new machine. Working version of a new machine. So there is some new machine which you are developing, and it's not just simple a prototype, it's a working version. It's eligible because as soon as the testing will finish, you will start using it. So eligible. D, the title, heading, font, and design of the front page of a major broadsheet newspaper. Title, heading, font, and design, no. You can't copyright the fonts and designs. You might have a logo. Logo is a different thing. But front page of a newspaper, I can't say that on my newspaper, I will use Calibri, nobody else can use Calibri. Or I would use font number 12, nobody else can use. No, it's not. D is also not. So B and C, I mean, number 2 and number 3 are eligible. The other 2, they are not eligible. Got it?
Yeah.
This number 36 you asked, let me speak it again very quickly. We are not going to do any calculations, just for the sake of record. At 30th September 2009, Sundown Company's trial balance showed a brand at a cost of 30 million. Less accumulated amortization brought forward at 1st October 2008 of 9 million. So it means that 30 million was the cost, 9 million was amortization. Net book value or carrying value is 21 million. Amortization is based on a 10-year useful life. Okay. An impairment review on 1st April 2009, impairment review. And you find out that the value of the asset is 12 million. So in the books, it is 21 million, but after impairment, it shows only 12 million. So 9 million is your impairment loss. And a remaining useful life of 3 years. So you consider that asset is 12 million. However, on the same date, Sundown Company received an offer to purchase the brand for 15 million. Now that's the market value. So what should be the carrying amount of the brand in statement of financial position of Sundown Company as at 30th September 2009? So what should be the carrying amount of the brand? Now, what you should remember that you've got 2 things. Remember that, how do we make impairment review? My cost was, if I have to write down somewhere, my cost was 21 million. This is what is shown in my books. Then I had my value, which is value in use or whatever, was 12 million. And then I got an offer from the market, 15 million. So you will take higher of these 2. If you remember the lesson from impairment, we take the bigger one. So we should be taking 15 million. And then cost is 21, recoverable amount becomes 15. Remember assets, always remember, assets should be shown at recoverable amount. They cannot be shown at more than recoverable. My balance sheet says 21 million. I have 2 estimates, 12 and 15. I will take the highest one. The highest one is called recoverable amount. If you are not clear about recoverable amount, watch the video IAS 36 impairment. And I call it my recoverable, like maximum what I can recover from the asset is 15. So now comparing 21 and 15, I will take 15. So 15 million is something which I'm going to start point as in my number. My asset is 15 million. This is maximum I can recover, maximum. Life is 3 years. So it means that 5 million is my annual depreciation because it says life is 3 years. And when did you do that? You do it on 1st of April. And you are preparing financial statements on 30th of September. So it means that April, May, June, July, August, September, 6 months. 5 million is my annual impairment. Impairment for 6 months, annual depreciation, amortization. 6 months amortization is 2.5 million. So it means that on 1st of April, asset was 5 million. And after 6 months until 30th September, 2.5 million is my amortization. And the carrying value of the asset will become 12.5. Students, they only get confused. Should I take 12 or should I take 15? Most people, they get confused here that should I take 12 or 15? Take the highest one, because you have to consider the recoverable amount. Recoverable amount is the higher amount. Recoverable amount is the higher of value in use and NRV, whatever. So this is 12.50. Your answer should be here 12,500,000, something like this. Okay, write down in nearest 3 zeros, so remove the last 3 zeros. Write down 12,500. This should be the answer. By the way, I'll just speak it here. We are doing it for IAS 38, which is intangible asset. Even if it had been a tangible asset under IAS 16, you would have done the same treatment. I mean, the treatment for IAS 16 and IAS 38 are same.